You are now being joined to your conference.
Any questions via the Q&A panel that you can see on your screen now. We will be circulating a copy of the slides and recording of the webinar a few days after the event. I'm now going to hand you across to your host for today, Jane Mann from Fox Williams.
Hello and welcome to the Gender Pay Gap Reporting webinar. My name is Jane Mann. I'm Head of Fox Williams HR Law Practice, and I'm going to be your host for today's presentation. Today's webinar responds to the recent government announcement of mandatory reporting of gender pay information. We will give our views on the requirements and discuss the areas that companies should focus on in the run-up to the requirements coming into effect. I'd like to introduce your speakers, Andrew McLeod and Audrey Williams. Andrew is Principal Consulting Experience. He leads the UK Rewards Consulting practice, and he has led a number of equal pay audits and was active in the consultation process. I'm also delighted to have my partner and colleague, Audrey Williams, with me. Audrey is a partner in Fox Williams HR Law Practice, and she is an acknowledged expert in equal pay and diversity, as evidenced by the fact that she was recently asked to give evidence to the Parliamentary Committee on Women and Equalities. Our speakers will each provide their own perspectives on the regulations, and after a legal briefing on the proposed requirements, we will discuss together the practical implications of the regulations and the potential impact and risks to your business. Again, please feel free to ask questions during the webinar. So let's, Audrey, just before you dive in, could I just mention to those listening why Fox Williams and I are now collaborating? Because we are collaborating because we have complementary skill sets, and together we have all of the expertise and experience needed to advise you on how to comply with the regulations and to deal with other issues that may emerge along the way. Fox Williams are leading employment lawyers experienced in advising on and defending equal pay claims. Aon Hewitt, leading HR consultants, experienced in conducting equal pay audits and its impact on talent and performance and reward. We have a very practical approach to managing your risks, but at the same time promoting diversity within organizations. We aim to provide a seamless combined HR and legal advisory service. And working together, we can help you under the protection of legal privilege where an organization wishes to assess its legal risks before publishing the data. Audrey, if I could now hand over to you to give the background to the regulation.
Thank you, Jane. So let's dive straight in with a very quick history lesson, but I'm only going to go back 5 years because that has actually been the period of time that this particular provision about mandatory reporting has lain dormant in the Equality Act. It's Section 78 that has sat there when the Act was introduced and brought into force in 2010, and the consultation paper that committed the government and gave us some shape as to what this might look like was issued back in July of last year. As you can see, there was a large number of responses to that, quite a varying range of views, but the consensus generally seemed to be that this was a provision that was worth bringing into effect and into force. Now, some of you might already look at the middle point there that talks about who's going to be immediately impacted. So it will capture employers who have 250 or more employees as a legal obligation going forward. Just be a little bit cautious of that. Particularly in the sense that this is not the only initiative in the gender and pay and opportunities space that might affect your organization. So you may fall outside the gender pay reporting, but if you are, for example, in the financial services sector, we are expecting a report with some recommendations that the Treasury has commissioned that the CEO of Virgin Money is leading. That's about the retention and progress of women in financial services, and the Women in Equalities Committee recommendations are likely to come out probably in the next couple of months. So what we do have, following on from the July consultation, are draft regulations which were published on the 12th of February. And we want to walk you through the detail of those provisions in terms of focusing on some of the key areas, bearing in mind, we'll come back to this, that the whole driver for this is to get organisations to demonstrate what their overarching workforce profile looks like from a gender perspective. So I've given you a quick history lesson. Let's take a little look at the future and what that will hold. And Andrew's going to take you through the timetable.
Yeah, thanks, Audrey. So on your screen now, you should be able to see the key dates. As you'll probably be aware, the draft regs were published on the 12th of February. And now I guess we've got a pretty short period of consultation, which is going to close on the 11th of March. So I guess today, as we go through this webinar, we're going to be picking up on just some of the points, some of the areas that we think need to be clarified and buttoned down before these regs are implemented. So if all goes to plan, implementation would be on the 1st of October 2016, with that first reporting date on the 29th of April 2018. I guess what we would say as well is, just thinking about the data that you're going to be reporting, that first data set is really going to run from the 1st of May this year through to April 2017. So please don't leave today thinking, you've got more than 2 years to think about this. In essence, this is something you need to start to be thinking about right now. And then every year from 2018 on April the 29th, you'll be needing to report these regs, I guess, with a 5-year review plan to determine what burden this has placed on employers. So that's the schedule. Audrey, if I can just turn back to you then, and just if you can just give us a bit more detail on the companies that will likely fall within scope of the legislation.
Yes, thank you. So 2 aspects to think about here. Firstly, which employers are in scope, and then what employees are you actually reporting on, because those are both quite important aspects to understand the precise scope of the regulations. So the first thing to say, and it's not without a bit of controversy, and it's generating some interesting debates at the moment, is that the employers that are caught will be those who have employees of 250 more at the relevant date. Now, the relevant date will initially be the 30th of April 2017, but of course this is annual reporting. So to meet that threshold and have to report, you have to have 250 employees each April in order to have to do the annual report going forward. The reason it's slightly controversial is because employer here means the actual legal entity, the individual subsidiaries that is in the employers contractually employing the individuals. And there's been a bit of debate about whether that should actually be looked at again and should perhaps encompass group entities rather than just the individual employer subsidiary. So that's the relevant employer concept. You then need to think about who are you going to be reporting on, i.e. which employees' data will you need to capture and produce information on. Now, relevant employee is fairly familiar in many ways because the only individuals that count towards that 250 threshold are those who are ordinarily working within Great Britain, and I'm sure many of you are familiar with the case law that we have about how do you decide who's ordinarily working, both from unfair dismissal and indeed discrimination cases, but also whose employment contract is governed by, now it uses the phrase UK legislation. I suspect that might need a bit of tidying up before we finalise the regulations. And it is employees, of course, so we're not encompassing, for example, workers and other self-employed individuals or consultants. But we are, for example, including in that concept, temporary staff. They're not agency staff, but if you're employing them, and if they are employed at the relevant date, doesn't matter how long they're likely to be employed, then they will be included within this group on whom you need to report. And just finally, it will be private and third sector organisations and employers that are captured here, but the public sector will need to be alert to the fact that there will be some future proposals, I suspect very, very shortly, that will extend to include them into this reporting obligation. So that's who's in scope. I'm going to hand over to Andrew, who's going to take us through what do you actually need to report on.
Absolutely. Thanks, Audrey. So the next slide, you'll be able to see what the key reporting requirements will be. I thought what we'd do is we'll run through this summary first. I'll then just go over in detail some of the key points on the reporting requirements. Later in the presentation today, we'll also be looking at a couple of examples as well to give you some a tangible idea of what is expected. So first of all, there are 5 regulations, 5 requirements in total from A to E. The first 2 are really looking at a snapshot of total pay. And this is really looking at the percentage difference in hourly pay during the relevant pay period. Okay. Now they're asking for this against a mean statistic and also a median, and we'll come back to this in what this will mean exactly. Then there's a section on bonus. So under section C, we have a percentage difference in mean bonus pay of male and female employees, and this is over a 12-month period up to the 30th of April. Okay, and then they're also asking for the actual percentage of male and female employees who actually received a bonus in the 12 months to the 30th of April each year. And then interestingly, we have this additional one that really isn't about the actual pay number differentials, but it's actually about a count of the number of male and female employees in each quartile band. Okay, so if I just jump back to A and B, I guess the first thing we'll notice is that they're requesting an hourly rate. This is, I guess, not unsurprising. It's the preferred approach that the Office of National Statistics adopt, and it really sets everybody onto a level playing field, so accounts for different contracted weekly hours and the like. And then I guess the next piece is, why are they asking us for both median and mean? And I guess there's a comparison piece here. Again, the ONS really do prefer to look at the median statistic, but of course these figures are going to be used for comparison across Europe and internationally, and there we tend to find the favored statistic is the average. But I think there's a more important point here, and I think they've been quite clever here at requesting two, because the mean and the median are very much complementary statistics. And if you remember back to your O-level or GCSE maths, you'll know that the median is really about the midpoint of the range and doesn't really account for any extremes in the sample, whereas the arithmetic mean, or what is often referred to as the average, is really a reflection of the overall distribution. So it's interesting, when these two are compared side by side, and we'll look at this later, it really gives us a sense of how much skew is there within your sample. Okay, and we know from research, from ONS research, that women are disproportionately represented at the lower earning distribution in the economy, and men are more represented at the higher end extremes. So this is really going to give you this is really going to show how fair you pay within your organization. Okay. So I think we're going to find that very interesting, and particularly when we couple this with the information in section E, where we're also looking at the distribution of your male and female employees at different pay bands. Okay, and then I guess on C and D, there's the case of, why are we splitting out bonus here? Because as Audrey's going to talk to you later, bonus is actually included in the first two calculations. And again, I think they've been quite clever here, because this is going to be over a 12-month period. It's not going to be a snapshot. So employers are not going to be able to avoid that snapshot calculation if their bonuses don't pay out at that point. Okay, this is over a 12-month period. And also, we saw in the response to the consultation, we saw actually that there is an appetite to understand this as a standalone statistic, because particularly in some industry, in financial services and insurance, there's a concern that there are some major differences here between the two. Then finally, on the request for headcount numbers, I was mentioning earlier, this is very interesting because, you know, this is really going to highlight in your business where you may potentially have a glass ceiling, okay? So this is going to require you to essentially arrange your pay from top to bottom, and you're going to need to disclose how many men and women are in the top quartile of your overall pay band within your organization. And we think, you know, of all of the items here, if anything is going to encourage employees to start looking at gender diversity and the equal pay gap, this is certainly going to be one of the most motivating factors in the requirements. So, Audrey, if I could just hand over to you, and if you could just talk in a little more detail when we talk about pay, exactly what do we mean by that?
Of course. So let's take a look at there are two elements that are very different in terms of the formula here. One is reporting on pay by reference to a very specific pay period, or snapshot as we're calling it, and the second and different figure is around the bonus figures and the 12-month window around what bonuses have you paid to men and women within your workforce. I'm just going to take a look at the pay provision first of all. We've had an interesting question about whether bonus is included in the pay reporting. Yes, it is, and as Andrew's alluded to, oddly enough included for both of those reporting aspects, for both pay and for the separate bonus figures. So what we're looking at here is calculating pay by reference to what's described in the regulations as your gross hourly rate of pay. So gross, obviously, before any deductions, but the hourly rate of pay has been used so that the figures that you're reporting on don't get skewed according to the number of hours that individuals work. And the reason for that is there was a concern that perhaps male employees will work longer hours than women, they might work more overtime, so that in itself would start to distort the figures. The challenge, I think, for many of us will be to identify that gross hourly rate. So the first thing that you have to do is identify the pay period, the kind of data lockdown that you need for that snapshot. And you're going to be reporting by the 29th of each year from 2018, and it's a look-back snapshot to the previous pay period that fell within, or that was covered by the 30th of April. So if you're paying weekly, that is the pay based on the gross hourly calculation that you paid in the week in which the 30th of April falls. If you're monthly paid, then it will be obviously the month in which the 30th of April falls as your pay period. You then need to take that gross pay figure and look and calculate what the hourly rate is effectively. And you do that by identifying what's described in the regulations as the weekly basic paid hours for that gross pay that I get. That's an interesting piece of language, actually, because it's talking about the paid basic hours, not necessarily the contractual hours. They're likely to be similar. But, of course, I might get paid basic hours, i.e. my standard working, might include an expectation, for example, that I'm working a shift or a rota arrangement. So that's my basic paid hours, leaving aside overtime. The pay is important as well. As you can see, there's a definition of what's included and a definition of what's excluded. I won't take you through all the items that are listed in the regulations that identifies what's included, but just to highlight a few in that list, maternity pay is included, sick pay is included, which I think is interesting because you then have to relate it to your basic paid hours. Clothing allowances, certain direct expenses are also included, and also notice in that second line bonus pay. So, of course, this would only be bonus pay that is paid in the pay period of the 30th of April. If you pay your bonus in another period, it doesn't fall into this calculation. But if you happen to pay it in that pay period during April, it gets included. And also be careful about what's excluded. I've already mentioned overtime and explained why that is. Essentially, benefits in kind, redundancy payments, tax credits, those types of items are also very clearly not included in the calculation. So there's a very clear definition of what falls in and what falls out. There are some questions around maternity pay, for example, and sabbaticals, because of course individuals that are on maternity leave or are taking a sabbatical, if they're still on your payroll, which they will be on maternity leave, they are still relevant employees. We can see that maternity pay, for example, is included, and somewhat strangely, including them but including perhaps a lower SMP rate might distort the figures. So there's a couple of issues around this definition that it's worth keeping particular attention to when the final regulations come out, just in case, after further consultation, it changes a little bit. So that's the definition of pay for the purposes of the first two items that Andrew mentioned that you are reporting on. And then there's a separate issue, of course, which is how do you calculate bonus pay? Andrew, can you take us through that, please?
Yeah, absolutely. So bonus pay, I guess the first thing to mention about bonus pay is this is probably much broader than we would typically define it. This is not just about short-term incentives. This is about both short-term and long-term. So here we're looking at payments that are received for profit sharing, for incentive plans, sales commission plans, management incentive plans, but we're also getting in to aspects around bonus deferrals, those that might be incorporated within a short-term incentive scheme. We've also got long-term incentive plans as well, which could include performance shares and options. So a lot of questions on this area here that I think still need to be buttoned down a little more. This calculation will be over a 12-month period. So as Audrey was mentioning earlier, they're managing to capture all individuals from this. I think long-term incentives is probably the area where we need most clarification. It's unclear what we mean by payment date, whether this is actually date of grant or when the shares vest or when the individual exercises those. So at the moment it's very unclear, and we expect that to be further clarified after consultation. So I think now I'll probably just take you on to an example. We'll just move on to the next slide. This is something we prepped. It's actual client data. I would just say that here we're not looking at total pay as Audrey has just defined it. We're really just looking at base salary and bonus. But we thought it would be quite nice just to draft up an actual example to show you what the figures may look like. Now what we've done here on the left-hand side, you can see A to E, the categories I was mentioning earlier, and we presented the figures and the calculations for each. Now the values in grey are those you will not need to report, but you will need to calculate them in order to determine your numbers. The values in green are those that any individual looking at these statistics will be able to derive. And then finally, it's really the ones in pink. The ones in pink that are highlighted here are going to be the ones that you will need to report. Okay. So first off, if we just look at A and B, these are the hourly mean and median pay. And here you are looking at the difference between male and female pay, and that is a proportion over the male hourly rate. Okay, and in this example, the mean or the average is 17, almost 18%. And then here we see the median is 15%. You can see that in this example, clearly there is some skew towards to higher end male earners. Then we have the bonus. So the bonus is calculated again, just to reiterate this, on that 12-monthly annual period. And there you're calculating the full actual value. We don't believe that bonuses, will be prorated. We're looking at the actual sums, regardless of whether they're part-time bonuses or not. So clearly that will have an impact. And here you're going to see a much larger number, and particularly for those that manage to avoid reporting bonus in A and B. Okay, so you're going to see some big big differences here, and in this example, that then jumps up to almost 31%. Then finally, looking at D, we're looking at the proportion of men and women that are eligible for a bonus. And this, interestingly, is a percentage of their own demographic. So it's what percentage of men are eligible for a bonus as a percentage of all men in the organization, and then what percentage of women are eligible for a bonus as a percentage of all women. Okay, and here in this case, we can see that 65 against 49%. Now, if you weren't following earlier when I was describing how the pay band reporting works, this is not individual pay bands according to your grading framework. This is one overall pay band that you will need to develop that will go from your lowest salary in the organization all the way to your highest paid individual, okay, typically your chief executive. And here you'll be sorting everyone into quartile bands. Okay, so essentially, your first quartile is going to be your min, the lower quartile. Second quartile is going to be your lower quartile to the median, etc. And there you will need to give the count. And so as you can see from the numbers in pink here in this example, the distribution looks broadly fine, but as soon as you get to that top quartile, it's really apparent where the glass ceiling is. So here we see, there's less than a third of women in the top band versus more than 2/3 male. Okay, so there's going to be some very interesting reporting that comes out of this. Okay, and then if we can move to the final slide, so this is really taking out all of the calculations. This is just giving you a very clear overview of the types of numbers that you will actually be having to report. And I think it's probably a good time to hand back to you, Audrey, if you could just tell us where we're going to need to report this and in what form.
Just before perhaps we move on to that, we've had a couple of interesting questions just around the pay and the data and what we're capturing, so it may be worth just picking up on a couple of those, given what we're looking at here. So there's one question, for example, about the payroll date. If I'm paid annually, that doesn't really matter for the purposes of gross hourly pay. You look at the pay period, and if my annual salary is paid monthly, it's actually capturing what is paid in the month in which 30th of April falls. So just to make that absolutely clear. Mm-hmm. Andrew, there's been an interesting question about salary sacrifice, which I know you and I have debated a little bit.
Yes.
In terms of what's intended here, because some of the inclusions and exclusions aren't entirely clear.
Yes.
We certainly think.
Yes, I think with salary sacrifice, I think it's clear that's excluded from this, and it's really before any deductions for contributions into a salary sacrifice scheme.
And then just one final point before we move on to where are we publishing this is a question about leavers. And of course, you may have a situation where you paid a bonus to an individual prior to the 30th of April, but you have to report on the bonuses that you paid in the 12 months preceding. So if they're a relevant employee because they were employed under a contract governed by government in which they were ordinarily working in Great Britain, and that test applies, and again, this may be tidied up later, it doesn't matter that they've left, because it doesn't say that they have to actually have continued to be employed as at the 30th of April, which again is perhaps a bit of a point that we might need some clarity on. So we can see this nice illustration of the data sets that will be produced. Let's just take a quick look at where are we actually putting this information, who's going to be able to access it, and what's the publication obligation. So we already know that we have these publishing deadlines. So the first set of data, which is the snapshot to the 30th of April 2017, the bonuses paid out in the 12 months prior to the 30th of April 2017, will have to be reported. Now it says within 12 months, so that means by the 29th of April 2018. I think one of the interesting discussions that you will want to have, and we'll no doubt be talking to clients about, is is there a benefit in going early? Will there be a flurry of activity the week before the 29th of April of 2018 when this information will be produced? There are two aspects to the publishing requirements, one of which is clearer than the other. So the first aspect is you will need to publish the data on your UK website, and it will need to be published in English. Obviously, if you're subject to the Welsh Language Act, that might be another consideration. It should be accessible by both employees and the public. We will no doubt get some guidance on that as to what that actually means. Should it be searchable? Should it be, do we recommend it's on certain pages on the website? Accessibility, of course, brings all sorts of other potential issues around alternative formats and requests in terms of addressing disability and visual impairments, and they have to remain online for at least 3 years. So here we see the potential for individuals and interested organisations to start tracking trends within your organisation, within my employer, and carrying out some comparative analysis about where are things improving, with which organisations do we see an improving pattern or a static pattern, or indeed something getting worse. It will also have to be accompanied by confirmation, a written statement from a senior individual to confirm that the information you've published is accurate. So in other words, you will need someone of sufficient seniority signing off on this data and obviously committing and confirming that it's accurate.
And Audrey, when you say senior, what kind of role do you think that we're talking about now?
Well, again, the regulations indicate that it really has to be someone at a pretty much executive level with the requisite authority. So it talks about a director, obviously of a corporate body, a designated member, if you're an LLP or a partnership. If you're some other unincorporated organisation, then it's the most senior employee. So those are the individuals you need to start briefing and talking to and explaining what's coming down the track in terms of these provisions and obligations. So that's the first publication duty. The second will be, and this is the unknown bit, you will also have to upload it onto a government website. Now, we don't know what website that is, where it's going to be, which part of the government's going to take responsibility for it. So there's more to come on this aspect. There's also a hint that what the government intend to do then is produce league tables by sector, but we don't know how they're going to rank in terms of, as you can see, there are 5 data sets you'll be publishing. We don't know if they're going to publish a league by reference to an aggregate of those 5 pieces of data, or whether they're going to actually focus on one element. Interestingly, there are no civil or criminal penalties within the regulations for non-compliance. That will probably be one of the things that is kept under review going forward. That isn't to say that there won't be potential repercussions and consequences to this, whether you comply or indeed organisations decide not to comply, because there's some, I think, very serious potential here for that to be highlighted, not just actually by government, but from a raft of other interested parties and stakeholders. So more details to be to come on that going forward.
Okay, and Audrey, just looking at the numbers, I guess we're thinking the numbers for a lot of us are going to look pretty bad, right? So I guess the question that we're getting that's coming up is, if we've got a large gender pay gap, does that mean we've got an equal pay concern? Does that mean we have the potential equal pay claims further down the line?
I mean, it's an interesting question, isn't it? Because this is such high-level reporting that it's difficult just on the face of it to say, I can see from those statistics, I, as an individual, am being paid unfairly. So we have, on the one hand, the gender pay gap reporting, which is, of course, very aggregate, very high-level. I think it sets up a line of inquiry, actually. It might make me concerned, it might make me suspicious if I'm within the organisation, and it might then move me into drilling down and asking for more details. Yeah. I think we need to be a little bit careful. You've kind of got the old adage, you know, there are lies, damn lies, and statistics, and this probably falls within the risk of the latter, because you could have a very poor gender pay gap, looking at the data sets and the reporting, but not actually have a legal equal pay problem, and vice versa, of course. Because when we're looking at equal pay, we're looking at the individual pay and benefits term by term, that I get as an individual if I'm doing work that is equal to you, someone of the opposite sex. I hope it won't have escaped your notice also that when we're talking about equal pay, we have some illustrations here of two individuals who are querying what it means for them individually, but of course important not to lose sight of the fact that it's not just about gender pay equality, and equal pay is of course about sex discrimination, but you also have obligations around not paying differently because of age, ethnicity and race. So it's, I think there's potential for this to trigger some inquiries that could lead to equal pay challenges, but there will be a lot of work yet to be done, so it's not an automatic exposure. It's probably worth us looking in a little bit more detail at the risks that this gender pay reporting might actually open up for organisations.
Yeah, good. Okay, so I suggest we're getting an awful lot of questions coming through, so I suggest I move through these fairly quickly, but we do just want to highlight the key risks, and I guess top of the agenda for us is really the talent and the risk to your HR brand, because you know it's not just going to be the press that are going to be getting hold of these numbers. It's going to be your employees. Okay, so this will have an impact on how your employees perceive your organisation, and it's also going to have an impact on potential talent, so your talent market. Potential new recruits, bright grads you're trying to attract, they will all be looking at your numbers. Operational and commercial risks, clearly this is going to have an impact when it comes to the bid process, when you're looking for new work. Also, important to get on top of this now, because bear in mind if you do an equal pay audit and you discover there are issues that you need to address, that can take a number of years to rework and fund those changes. So we would encourage that you look into those now. Audrey, in terms of, I guess, the biggest impact we're looking at is probably reputational risk. Could you just elaborate a bit on that?
Yes, I mean, one of the things that some of you will have seen in the press since the regs came out is reference to naming and shaming. Now, there's been no explicit threat from government that they will do that, but I think it's been interpreted as a possibility because of the league tables that they are saying they will produce. Obviously, there are interested parties, not least trade unions, campaign groups. The press might obviously start looking into what organisations are reporting. We think there are some sector challenges, high-risk sectors. I mean, I've certainly already got experience that history tells us from certain sectors like, you know, statutory bodies, local government, of course, where I've done a lot of the equal pay work and challenges. And we're seeing equal pay claims now in the retail sector. So we know that there are interested parties, lawyers that are taking class or group actions on the back of it. And again, publishing this information might lead to that. Thinking about both the internal as well as the external impact and PR. And then, of course, the litigation risk. And I think a lot of this is focused around it triggering requests for information, whether that's through questionnaires, pay discussions. I think this data has the potential to be produced in not just an equal pay claim, but actually a sex discrimination claim. Look at the profile of this business. I wasn't promoted. This tells a story. This draws an adverse inference in terms of the data. Be very careful in terms of some of the knock-on risks, because we're talking with equal pay claims that could lead to up to 6 years back pay in terms of liability. There might be disputes about the data that's been produced, perhaps whistleblowing, because we've got information now in the public domain that individuals might start challenging and complaining that they're being penalised for delving further. So those are the sorts of risks. Now is the time really to start thinking about how high the risk is for each of you within your organisations, and whether you should take advantage of the window of opportunity that we have now between now and the first reporting date to do some analysis, take some initiatives, start addressing what you anticipate might be some difficult areas, so that your narrative, at least, even if you can't change the figures, will look better. And in that window of opportunity, just think about how you best protect the organisation. And one of the ways of doing that, of course, we've talked about the data lockdown, so you can start doing the analysis for April 2017. But you could lock down the information for this April, do the analysis, but do it under the safer cloak of legal privilege. Now, that has some very carefully framed parameters, but it would enable you under legal privilege, if that's appropriate for your organisation, to keep better control, keep it confidential, keep your decision-making and consequences within the senior executive team so that you're not committed before you actually know what the picture will look like. So in some organisations it might not be appropriate or necessary because there will be more transparent collective bargaining perhaps, but it's an important step as you are planning your response to these obligations.
So Audrey and Andrew, thanks very much. And so this is me, Jane Mann, the Chair. And so the summary of what you need to do now is start gathering the information, take remedial action, and consider how to position the information in the narrative. And could I just ask both of you a few questions, because what our listeners can't hear is the enormous number of questions that have been pouring through during the webinar, and there's a number of themes emerging, and one of them is exactly how do you do the pay calculation and what is included. And there's been a lot of detailed questions about what allowances are included, and points of detail such as if we have car allowances but people can opt to have actual cars, are those types of allowances included, all sorts of different types of commissions and bonuses and attendance allowances and so on. Could one of you just perhaps explain the concept of the pay that is included in the snapshot? Is it just the cash that an employee received in that month as a snapshot? What happens if they had a bonus a month before, but not in April?
Sure. I did see a question, someone saying, you know, we pay our bonuses in December. Will our data be included in the in the numbers? And the answer is it will be included in C, where you are collecting your annual figures on annual bonus differences.
But not in the snapshot.
But not in the snapshot. Okay, so that's a really key point, and clearly that will make comparability on those numbers actually quite challenging, because you need a lot of narrative underneath to really clarify something.
Audrey, do you have a...
Just on some of the other points, I mean, that's an interesting question, and it draws this distinction about the car allowance as opposed to the car as a benefit in kind. It's very clear that benefits in kind are excluded, but allowances, and it's really saying things that individuals get in cash.
So it's cash before tax is the key concept.
Subject to those obvious exclusions around overtime pay. It's the cash in hand that they're talking about, all the allowances. There's no distinction. I think we had another question about what if it's a temporary responsibility allowance. No distinction in the provisions around that either.
No, that's right. And then there was just saw quite a few questions around, you know, is it full-time equivalent data? Or is it actually based on the actual amounts? And the fact is, it is, for our understanding, it is on the actual numbers.
And so on the bonus calculation, that's a look back, not a snapshot. So that's over the preceding 12 months.
That's correct. And quite clearly, you know, we're looking at a mean figure here for bonus. We're not looking at a median. So it is going to highlight women who tend to do more part-time work, are going to have lower bonuses, versus at the higher end, men who tend to be the more representative, the higher end of the organisation is going to be a big skew towards them. And
an interesting detail question about the percentages of people in receipt of bonuses. What if they're only eligible to receive a bonus and don't actually receive one?
Very good question. Yeah. So this is based on receivers only.
So again, the principle is the cash you actually receive.
Yes, exactly. So it's not about eligibility, it's about receivers. So those that actually were in receipt of a bonus, they're the ones that get included in the calculation.
I think an area where more work might be required is long-term incentives, and there's an interesting question about do you value a share award at the date of grant or the date it pays out?
Yes, and that, again, another great point that still needs to be clarified. I mean, we look at financial services CRD requirements, that is very much focused on the valuation of at the grant date. But we suspect actually it's probably more they're trying to get at the payment date, whether that's vesting or when it's exercised.
Yeah, and again, it uses the very clear language with shares that it's about the value and the cash equivalent value of the shares on the date of payment.
Yeah.
So I suspect that's a point that we will we will certainly be going back to government about to say we need clarity about exactly what you mean by date of payment, so that there is a clear distinction between what are deferred shares when the options are, date of grant.
Another set of questions relate to the calculation of working hours, and also what happens where an employee, but not actually working, on maternity leave, on sabbatical, maybe somebody with a 0 hours contract. How do you calculate it? Is it actual hours worked, or is it hours that you can be required to work under your contract? Any thoughts on that, or is that another unknown at the moment?
Well, I think there might be a difference between what's been drafted and what was intended. So you would normally expect that it will be by reference to the contract and what would be your normal hours of work. But the language is very specific. It talks about the paid basic hours. So that suggests that actually, if I'm on maternity leave, even though you have to report on me, I don't have any paid hours that you're paying for.
So is there a detailed point to be addressed there? Because, of course, some of the people have been pointing out that there's an inherent bias, because if you include maternity pay and you include people on maternity leave, then you're going to be reporting on pay that's depressed because they don't receive as much while they're on leave as they would do normally.
Yes.
So therefore that's going to skew the figures to suggest that there's a greater gender bias than is actually the case.
Yeah, no, that's right. I mean, further clarification will be needed, but I think regardless of what the final outcome is, there is clearly going to be a heavy burden on the employer to really add that additional narrative to, explain why these differences exist, and that's down for each employer to determine individually.
We have so many questions coming in, we can't hope to answer all of them. It's just a few quick ones, maybe, as we head towards the end of the session. Are partners included?
Provided they are true partners, because obviously partnerships are included. Partnerships with 250 employees have to report, but not on their partners if they are genuinely self-employed. Obviously, salary partners, if they're employees, would be caught and would have to be reported on.
Northern Ireland, is that in or out?
Northern Ireland is out, and that's because the relevant employee that's caught has to be employed in Great Britain, and of course the definition of Great Britain excludes Northern Ireland.
Yes, and we have a number of questions coming in from multinationals asking about subsidiaries, and one questioner has asked, we're an international company, but we have a UK sub with under 100 employees in it. Are we caught?
No, you would be excluded. So it's on the employee entity. You need to have more than 250.
And that might change during the consultation exercise, possibly?
Possibly, particularly around the definition of the entity. But I think in terms of the threshold, I think that's pretty clear that 250 has been set.
And we have a number of questions coming in about how to report, which websites, and some people are pointing out that they have multiple subsidiaries, and are they required to report on all of them on the subsidiaries website, on the group website? Does it have to go into the annual report? And so there's lots of multinational issues coming through.
Yeah.
So we'll have to wait and see, I think, on some of that. And then one or two people are asking, can they explain the figures? If they look bad, can they give a narrative and explain?
Yes, I mean, absolutely. There is scope. There's no obligation, but there is scope to give a narrative and provide some more explanation. I think that's an important provision. And this is at the moment drafted by reference to each UK subsidiary's website. So that is really important to bear in mind. On the annual return, it doesn't dovetail the two. It's talking about website publication rather than annual. Although it's annual reporting, it doesn't then say for listed companies it must be added to the annual return.
I think we've probably run out of time now. We have a huge number of questions. Obviously, an enormous amount of interest has been generated. Fox Williams and Aon will be working together after this, and we will be responding to the consultation, drawing on a number of the questions that have been raised today. We will keep in touch with everyone. We'll be mailing out the slides and generally following up.
Just a note from me, the administrator. Thank you for joining the Gender Pay Gap webinar. We hope you found it useful.